Good morning, good afternoon, expats. My name is Jeremy Harper. Thank you for joining in and tuning in for another episode of Expat Mortgages. Today we have a guest online with us. We have James Anderson, who's the founder of Bluestone Property. Good afternoon, James. Thanks for coming on board.
Jeremy, thanks for having me, mate. Good to see you again.
You too. So we caught up last year. We did an episode talking, I think it was towards the back half of 2025. So since then, there's been a few things have changed. So perhaps we'll start with maybe talking about a few suburbs that have performed well over the last 12 months. I'd be keen to get your thoughts around some of those suburbs in Melbourne that you've seen that have really outperformed last year.
Yeah, absolutely. I mean, the big suburb that has been the talk of the town, particularly around Melbourne, is the southeastern peninsula suburb of Frankston.
Yep.
Last year, we purchased, uh, I reckon, circa 40 properties in the Frankston region. And no doubt the annual price change of Frankston in 2025 was well over the, I think 15, 16, 17% mark.
Yep.
So yeah, performed really well and sort of saw that with our boots on the ground, absolutely.
And what do you think was driving specifically to that area?
I think just the fact that it was so undervalued. Like you could
Yep.
buy a quality three-bedroom home early last year, um, like brick three-bedroom home last year on 600 square meters of land, for example, for under $750,000. For $700,000.
Yep.
And now you sort of can't find the same thing for anything less than 800, low eights. So yeah, I think just how undervalued it was, and obviously Bayside Melbourne has always been a premium location. You're just south of, your Brightons, um, your Black Rocks, and whatnot. And you're just north of the Mornington Peninsula. So I think location wise, Frankston was ideal, and it was still probably lagging in price based
Yep.
off the negative sentiment of the history of Frankston. In the history, the last say 10 years, 15 years, Frankston's been given a bit of a rough name, and that's really clearing up now.
And do you think that's changing in terms of through those sales? Obviously, you would have had a mix of investors and owner occupiers. Is that demographic
Yeah,
changing that's moving in?
the I mean, we predominantly deal with investors ourselves, but
Yeah.
we did have a rise in the number of first home buyers, particularly towards the back end of last year.
Yeah.
I would say after the changes to the government schemes for the 5% deposit, no LMI. So yeah, definitely saw a few more first home buyers in the last quarter of last year.
Yeah. Interesting. And I guess that probably segues nicely into we're now starting to see October last year. So we had a number of months of the new program in place, the first time loan deposit scheme. And the big changes, I think
Yes.
we talked about this, was the income cap's been removed. And in Melbourne, the price cap did increase. So it went from 800 up to 950.
50. Yeah.
And so what did you see? I think, did you see, like myself, there was a bit of FOMO into the market leading into that? So sort of September and then after?
Yeah, I mean, we were in a really interesting position last year where we had interest rate cuts all the way through to the fourth quarter,
Yep.
third quarter of last year. So, borrowing cost of debt was becoming more affordable. And I suppose now then we had this 5% deposit scheme that was, expanded, and income caps removed. There was definitely a lot of FOMO in the market in the quarter leading up to October, and a lot of people were sort of chatting to us, trying to plan and work out what was going to work for them. So yeah, absolutely.
Yeah. And now that's sort of, I mean, we've just had the RBA February meeting come through. And so obviously they've
Yes.
increased rates. So that wasn't a long period of sort of rates being cut, but now we've got a 25 point increase coming through the back end of February. So those same first-home buyers are going to experience the first increase ever under their mortgages. So they've probably settled just before Christmas. They probably had one or two mortgage repayments, and now they're going to have to get used to potentially, well, one, but maybe a couple of increases through 2026. What do you think that's going to do to that same segment of the market this year?
Yeah, I mean, I think it's going to curb off the level of FOMO
Yeah.
that these guys were having. Obviously, with interest rate rises, people's borrowing capacities are going to be affected to some degree, right? So we saw a lot of demand up to that $950,000 mark
Yeah.
in Melbourne, because that was obviously the price cap for the 5% deposit. That might reduce out to maybe 850.
Yeah.
Now, I think there'll still be demand, but it'll curb off a little bit, and the price point at which it does will be lowered.
Yeah. Yeah. So really roughly, I mean, it depends on your debt profile, but every time there's a 25-point increase, 4% roughly circa of your borrowing capacity is reduced. We are seeing also on top of that, which I think probably have more of an impact, is, you're getting the HEM released every quarter by banks. So they are increasing what their minimum living expenses on the application. So I think that will start to continue on, particularly if inflation's running above the RBA forecast. You'll see, what the banks anticipate your minimum monthly living expenses will be higher every quarter. So putting those two together does equate to a lower borrowing capacity overall. And so what do you think, I guess, the little bit of that's taken out of the market, do you think for 2026, what do you think are some of the themes that will play out, in this type of environment?
I think we're still going to have a demand for investors looking to capitalize on Melbourne being undervalued.
Yep.
You got Brisbane at an all-time high, Perth an all-time high, Adelaide an all-time high, and I think Melbourne is still below its peak. So I think you'll still have investors trying to get in to the Melbourne market. And I think first-time buyers will still be around. They'll still be astute enough to appreciate the opportunity of the 5% deposit scheme, because there's no caps
Yep.
to number of places for that, and there's also no income caps, right? So I think everyone will still see that there is demand through both the investor and first home buyer space, but I don't think it will be as high as it was in Q4 2025.
Yeah. Yeah.
Naturally.
That's a good point. And I guess if people were planning to, particularly if it's own occupied property, if they were planning to use that scheme and get into it the back end of last year, realistically, a couple of increases on interest rates shouldn't make a material impact on your budget. And if it does, perhaps you just need to lower that down a little bit and just get comfortable that, if you're taking a variable loan and you're going to settle, you may settle and then your mortgage may go up, it may go down, and that's just sort of the fact of holding debt.
Well, based on you being a mortgage broker and you knowing your numbers, if someone's got a $900,000, or let's say $850,000 purchasing borrowing capacity, what does this 25 basis point increase mean for them?
Yeah, it will reduce their borrowing capacity by about 4 to 5% in isolation.
So 4 to 5% on $850,000, that'd be what, 30 grand?
Correct. Yeah, give or take. So you can, probably not a bad thing, you can make that difference up with just a higher contribution, right? You don't have to take that full debt. So I think people just need to be a little bit, as you said, a little bit more comfortable that you may not get the full amount. You may need to actually put a bit more into the deal to get that done, to offset some of that reduction in your borrowing capacity. Or perhaps that same borrower may actually, get themselves in a position where they've got higher income in 2026 because of higher wage growth. Perhaps they've been able to get a promotion. There's bonus income coming in that they couldn't factor in last year. So I guess it's not all necessarily doom and gloom for borrowers. It's just they have to be perhaps a little bit more nimble in how they're putting that deal together.
Yeah, yeah, understood. Yeah.
And so going to kind of 2026, keen to talk about what are some of the trends that you think is going to come through this year? I mean, I've got my sort of take is what I'm seeing, particularly since sort of the start of 2026, and this is a theme for Melbourne, but also for Australia. I'm seeing a lot more of my expat clients wanting to physically or make plans to repatriate back to Australia, this year.
Right.
And a lot of that is anchored by a property purchase.
Yep.
And that could be a reflection of just where the market is. I'm seeing a lot more established expats, perhaps they've been overseas for 10 plus years and they're ready to make that move back with their family.
Yep. What do you think is really driving the desire to purchase property back in Australia now?
Oh, I think there's still, I mean, regardless of what people may think's happened in the last 12 months in Australia, from a sort of a social and political landscape, it's still a very much a safe, quite a bit of a boring country, not predictable. I mean, if you overlay that, you look and say what's happening in the UK. When I speak to my expats over there, it's a very different economic environment in the UK, and people see where that's going. And then for some, if you look at say what's happening in the US, it's a bit more unpredictable. So I think people just like that sort of predictable, safe environment, really, and that's sort of where people are moving towards.
I think Australian real estate has historically always been a solid investment and should always be a solid investment moving forward. Like you talk to any Australian about, investing, they all talk about, buying a house, buying a home, buying an investment property.
Yeah.
Australian bricks and mortar is one of the safest investments on earth, in my opinion. And maybe I'm biased, but I just think since the history of time, it's the numbers have shown that is very true.
Yeah. No, definitely. And in terms of from a, I guess, planning, because obviously, we've got inflation, we've got higher borrowing costs that are going to be here for 2026. From what you're seeing in terms of on the ground when you're dealing with, council, people are trying to get approvals for renovations, for builds, for anything like that. Do you see any changes around that this year, or do you think it's going to get easier? It's going to be harder for investors to build or add value to their dwellings in Melbourne or in Victoria?
We've had a few clients towards the back end of last year start to build or do renovations or build granny flats.
Yeah.
They're flying through the approval process there. So I'm personally not seeing any change. I'm not too sure exactly what local councils will do in response to an interest rate hike. But just based on what I've seen in the last 6 months, we've got no issues with clients doing renovations in their particular markets. And the markets that I'm talking about are, your sub $1.5 million markets.
Yeah. Okay. And just to wrap this up, obviously listeners, they missed out on Frankston last year. You think that's maybe the ship is sailed on that one, but do you have any perhaps tips for 2026? Any suburbs that you're keeping an eye on?
Yeah, I mean, Frankston, you have probably missed the boat there just because we saw such a tremendous amount of growth over the last 12 months. My tip would be stay in the southeastern suburbs of Melbourne
Yep.
and just think logically. Think, where are people going to think next if they are being priced out of Frankston? Because Frankston's now is quite hard to find anything solid sub 850, 900K. So where are people going to logically next think after Frankston? So think about pushing out away from the water, for
Away from the water.
example. that would be. I mean, just look more inland to some degree, and where are property prices still solid under that 750 mark? Where prices where can you still buy homes under the $800,000 mark? I think the southeastern suburbs of Melbourne will always be blue chip. So find the suburbs that are still affordable in those areas and absolutely look towards that.
Yeah, that's a good tip. All right, perfect. Well, James, thank you for your time today. Great to catch up and talk all things the Melbourne market. Thanks for listeners. Just keep a note, we've got some upcoming webinars and we've got a masterclass that will be actually in San Francisco and New York. So if you're in those cities at the time, please sign up and we'd like to see you face to face. But until next time, thank you all for your time and have a great day.
Cheers, guys.